Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Market Trend Advisory Weekend Review video for March 18th, 2023. All right, well, let's get straight into it. Well, this was a pretty tumultuous week. We had a lot of turmoil in the banking sector. We had some banks that were basically taken over in the last 7, 8, 9 days. We have a few others like First Republic that seem to be in trouble. No one knows what's going on. At the same time, we're getting some big relief bounces that we saw last week. Money seems to be flowing into the big tech stocks again, which, I made a note about this. It's like there's sort of a flight to safety of Microsoft and Apple and, the other big mega caps. But really, if you look at their charts over the last year, that was no flight to safety. That was flight to even more losses. Maybe not as much as some of the smaller tech stocks, but so there's just, I called it just kind of dubious activity going on and suspicious activity of just some of the things we're seeing, but ultimately, if we come back to this, here's our report summary. We're just solid red. There's no reason to be in this market. We have market count of 0, no exposure to either the indexes or individual stocks or other ETFs. We have a high number of institutional selling days on both indexes. So, let other people get, their heads pounded in this market. It's an emotional market, and that's one of the problems. Just a lot of trading going on. You look at the volume, you're seeing a lot of just big moves up into key reports like FOMC meetings or Powell's meetings, and that's just a lot of it's just gambling. And we're not talking like Aunt Betty who's buying 100 shares. These are the big institutions. A lot of them are the ones that are taking care of people's pensions funds and pension money, IRAs. So really there's a lot of just gambling and sort of suspicious activity going on. But anyways, for our system here, there's no reason to be part of this. And we're just out. And now in terms of which is good, because let other people get, as I said, their heads beaten up a little bit or a lot beaten up while the market is, just not in a situation to be part of. In terms of our investing strategies, we're out now. This is where we are for the NASDAQ. Our 1X is up 5%, a little more, 8.5% for the 2X. The buy and hold has been beating it all year just because it kind of took off before our system got more exposed. And we were starting in, of course, we stagger in at 30% and 55%. So, but I expect this, if this downtrend continues, we'll see that rapidly dwindle down to, below our numbers and beyond and below that. In terms of the SPY, it's all roughly, our 1X and the SPY is roughly flat and a little worse for the 2X because we have some leverage there. But that's it. But, these things change. They can change rapidly. So let's take a look at the charts. So the Dow is acting pretty weak now. You can see here it finally broke below the 200-day. That's the black line. It's now living below the 200. It was the first index to blast above the 200. You can see here a few other times just got above briefly, wasn't able to hold. And then in October, we had this big blast off. This was definitely the strongest of the indexes. Then it looked like it was forming like a little cup with handle, which was very bullish and going in February, but it's now just fallen apart, broken below that. So it's looking pretty weak. In terms of the S&P, we're really just in a little trading range, which is kind of surprising given all the turmoil going on. But it's not looking very good. We're back below all the major moving averages. And we had a very high volume day on Friday, which was a lot of it's because of the quadruple witching. So, but it's not looking very good. And, the overall, we have a lot of things going on in the economy. It'd be highly, highly doubtful that this can just take off and go up. But, and of course, anything can happen, but it doesn't look likely. Now there's the stories of recession. Is it going to happen? It looks more like it is. We're getting turmoil. People are worrying about, is this going to be like just how it was in 2008 in the whole banking sector? What's Powell going to do with interest rates? So none of it looks like it's just free sailing and up and away we go. So I think at best case, we just kind of, the market's able to just float around here in a trading range. More likely that we're going to break down to new lows, but we'll see. But we don't trade on what we think is going to happen. We trade on what's actually happening. The NASDAQ, again, this was kind of just piling back into big cap tech stocks and mega caps. I just think that's really suspicious what's going on there. You can even see here we had all this big move up piling in. Look at this big blast off here, and it just didn't last. So, and then we had a very high volume institutional selling day on Friday. Now the Russell's really getting beat up just because there's a lot of these regional banks that are now suspect and maybe in trouble. And so this was actually looking really, really strong. We had come up to the old highs from August. It looked like it was going to break above, but fooled a lot of people, and we broke down below. So really, it's just not a very good picture going on, which is one reason that our system is keeping us out. In terms of the technicals, you can see we've really deteriorated. You can see the number of stocks above the above the 200-day moving average. We were above 50%, which was great, and then we've dropped down to the lowest in quite some time. The 15-week lows are just outpacing the highs on a regular basis. You can just see the ratio. Look, when we get down below 0.1, it's that's 10 to 1. Now we're getting much worse than that. Sort of one of the things we looked at. This was the number of. This is a powerful indicator, though a lot of people don't really use it. Just showing you what's going on under the surface with the leading stocks. And this really it was up, I think, 60 or so, and just started dropping well before the indexes started showing that they were getting hit hard with selling. And this just keeps dropping. We're just not getting any breakouts that are lasting. So that's a warning sign that it's kind of like a leading warning indicator. Down volume, you can just see here, look at the down volume going on. So pretty weak on the technical basis. Now, in terms of sentiment, we're starting to get a lot more extreme fear, big spikes above 1.15 on the put call. CNN, that was the CNN fear greed. That's the description there. The VIX has been rising back up. So we're getting to that point where sentiment, as a contrary indicator, is saying we're due for a bounce. We thought we maybe got that bounce on Thursday with that big move up, but a lot of that got reversed on Friday. Finally, here we had this has been a good indicator whenever the VIX, the volatility index, is dropped down below 20. We've had reversals in the S&P in the whole market. You can see here just in these kind of pink areas. Whenever the VIX got down there, we've turned around. This is the S&P, this black line. You can see this is now the fourth time it's done this. We got down to 17.06, and we've come down. And now you can see we're getting a lot more volatility. So, and then finally, we've been showing this chart. One of the things we've been looking for is, the market, of course, is always trying to discount. And, in the face of rising interest rates, now I don't have it all in this chart. This is a weekly, but we basically went from 0 to 5% in 1 year. Now, this is something I've talked about too in the notes and some of the other videos, is like, the market's been acting like you can just raise interest rates from, a gigantic amount in a short amount of time and have no repercussions at all. That's what the market started doing. It started rallying, and, the Dow was actually getting pretty close to all-time highs. It just seemed, silly, and that's just not how it works. Well, yeah, you can see is that we started now having problems in the banking sector. I'm sure there's other things that are lurking out there that weren't readily apparent before and are starting to come out now. But one of the things we were looking for is that we wanted to see this finally start to break and reverse. In other words, showing that either the market's discounted all this, or the Fed is going to stop raising interest rates. Even if they just pause, there is a good history of the market rallying when there's been a pause. But now we had a big break from over 5 down to 4.26. But the problem is that this is going down because of fear, not because so much that interest rates are starting to decrease naturally. It's more like they're just piling back into bonds out of fear of the market and other things. So this is not what we really want to see, though we do want to see lower interest rates. So I suspect this is just going to head back up once this crisis ends, or it's kind of doing the work of the Fed. So in terms of just cutting the interest rates without the Fed actually doing it. So we're just to kind of wrap it all up. I mean, that's all of our data we have here in the charts. We have the FOMC meeting next week, and that's the big question. What's the Fed going to do? Are they going to cave? There's calls now for the cutting interest rates, which looks pretty silly. It's not going to happen. So far, the banking crisis is pretty well contained. It could grow into a massive problem like we had in 08, 09, 07. But it doesn't look like it at this point, so it's not giving the Fed any reason to cut. They may just, the market's still pricing in a 0.25% hike, which seems likely. He may change his language. If he does, you'll probably see the market take off again. I mean, it's actually pretty silly. It's like children running this show. I know, everyone's just trying to game the system ahead of time. At this point, none of this is bullish. It may turn into a bullish situation, but it just doesn't look like it. And you just have to kind of tune out all this noise and actually see what's going on. I'm still looking for lower prices, from where we are now, probably substantially lower. Again, we came out of a bubble that was caused by interest rates at zero for way too long. We had this massive run up in 2020 because of the coming out of COVID. Just a lot of artificial stimulus that just really gunned stocks and tech stocks and everything up. And we're still in that hangover phase, and it doesn't just end. When you go into a bubble, it doesn't just end and just the bubbles end up going below where they started. And that was a bubble. I mean, there's no doubt about it. If you look at everything that went on, from the sentiment, from people trading meme stocks to, look at the valuations of a lot of these tech stocks. They just went nuts. There's all these SPACs that came out. I mean, there's an article on the site just kind of going through everything and just saying, look, valuations are off the charts, 150-year highs, just craziness. And so that's just not going to wrap up in 1 year, a little bow tied around and okay, that's it, off we go. So I think that's unrealistic. I may be completely wrong. I'm willing to be wrong. But then I let the market tell me. And right now the market is solid red across the board. There's just no reason to be a part of it. So we'll stick with that for now. But yeah, there are a lot of warning signs here. It just look like it's just going to be, roses again for a while. But it could change. It could change very rapidly. The Fed could cave. Powell could just get, pressured by political means and just caves and says, yes, we're going to start cutting interest rates to stave off, and the market would go into some massive rally that would probably be short-lived. But, again, anything can happen. There's a lot of emotions, a lot of money at stake, and we'll have to see, day by day, week by week, where this goes. But I would expect that we're probably going to be seeing lower prices across the board in the stock market for some time. Okay. All right. Thanks. Bye-bye.